Hey, welcome back to man. I'm so excited to be with you, man. I'm telling you, you gotta stay tapped in for these holidays. So today is December 24th. So happy holidays for you guys. We up bright and early on this what is this? Tuesday rising? Getting it in. So before we get started, make sure you tap that like, share, subscribe. Whatever platform you're on, make sure you like it and share it with a friend. And
Today's topic is really dope.
all right. And although we know Forex is not entirely stupid, right? Just trying to learn everything in a world that's giving you so much information at one time. All right. So as you welcome back to Forex is Stupid, in this episode, we're going to specifically dive into 3 ways to invest your money, especially if you're looking for a goal like buying a home or making a little bit extra income over time, knowing the best ways to invest your money, with for a short term or however the periodic time is, just knowing a different way, right? So one thing people won't tell you when you learn this skill, foreign exchange, you're going to be introduced to other markets like as you saw, indices, which is NAS 100, gold, which is a commodity. All right, then you have the U.S. stock exchange like US 30, FR France or something like that. You know what I'm saying? I mean, not US 30. My bad. SPX 500. Excuse me. I'm saying the wrong thing. Not SPX 500. US Stocks Exchange like Navida, NAVDA, right? Or NAVA, I think it's the ticker. Those stocks are stocks, period, right? So you'll get to learn some bonds and hedge funds and all this good stuff, right? Different things you start to learn about and different markets you start to tap into, even high frequency trading. And you're starting to want to do all these things. So you're introduced to all this stuff at one time. So that's why I say as you're diving in, we're not just introduced into one world. I told you I wanted to learn stocks. And learn from stocks. I wanted to learn how to invest my money properly, and then Forex came into my life and it taught me how to read the chart. So, you know what I'm saying? One does lead to the next. So we're going to throw all this at you because Forex is stupid. You feel me? It is. Because you don't just learn about one market, which is the foreign exchange. This avenue taps into other avenues. Okay. So we're going to give you 3 ways to invest your money. Okay. Especially if you're looking to make that first big house purchase. All right. So let's dive into it. The first way you can do it, we're gonna go with the first way you can do it is a high yield savings account. And I highly recommend this, but we'll talk about why I highly recommend it. But let's talk about what is a high yield savings account, and then some pros and cons of it. Okay, my bad. So for those who wants a safe and more stable option to trade, not or trade to invest, a high yield savings account is perfect for short term saving. Okay, and it's really important when it comes to picking the bank. I know from personal experience and research that a high end savings account is very risky depending on the fluctuation of the economy. So you want to pick the you want to get banks like credit union banks, and I think if you stay actually, I think I'm going to do an episode about it. Maybe next episode about what's the difference between a savings account and not savings account. What's the difference between a credit union and a non-credit union, and how that can help you when it comes to invest your money, and such as a high yield savings account. But anyway, staying on topic. Um, Investing your money into a credit union bank that does high yield savings account can be beneficial because if it's a fixed rate, then no matter if the economy is going through crazy fluctuation, you're gonna be at this fixed rate. Um, According to the policies, you're gonna be at this fixed rate, and that would you would be able to generate on your account, okay, for your savings account. So with the fixed rates that can outpace traditional savings account, it's a low risk way to grow your money while keeping it accessible for when you're ready to make your own down payment. Okay, so this is a good way. You can put the money in there. I know for Navy Federal, if you are a Navy Federal credit holder, you can invest 2,500, and then there's no penalties, no fees, any of that. But definitely go on the website and do research of yourself. Navy Federal. high-end savings account, and they'll go more into depth. But um, Navy Federal is a great credit union. It has 100% on the fraud and theft and protection of their clients. So when it comes to the safety of money, I could invest 2,500 into the high end savings account and then invest monthly into the savings account and be able to generate the profit on top of it. All right, so let's talk about some pros and cons. Um, The pros of a high yield savings account is the safety. Funds are insured by the FDIC, which is banks, or the NCUA, which is the credit unions. So you have the FDIC way and you have the credit unions. The liquidity is an easy access to your money without penalties. So you can go in there, pull the money out of the high yield savings account and still be able to put money back into, you know, continue to generate, and it's a predictable returns. It's a fixed rate, right? So no risk for market volatility. And that's what I said. If you do more of like the credit unions, they can protect your money when it comes to the fixed rate than going to a bank that's not backed up by any of this, and you're putting your money and risking it to a high yield savings account. All right. So the cons of it is the low growth. The rates are typically lower than inflation, meaning limited long-term growth. That's why you want to do if you're trying to get a house 1 to 2, 3 years. I'm not saying you can't do this for a long period of time, but just keeping in mind that your rates could typically be lower than the inflation rates, and it's limited when it comes to long-term growth. All right, the opportunity cost. Money in the high yield savings account doesn't benefit from potential higher returns elsewhere. All right, so that could be some cons that you can look into, right? But if you're looking to build this from a periodic time, all right, you can look into that, right? So that helped me, because you want to be able to know the best ways to invest. So the smarter and the stable alternatives to this is certificates of deposits, CDs. These are high risk for locking in your money for a set period, and treasury bonds, government backs with steady returns, often beating the high yield savings account rates. So if you want more of a longer term and be more set and stable, then you want to look into certificates of deposits, quote unquote CDs, and treasury bonds. Okay. All right. So let's move into the next way you can invest your money. All right. While learning all this skill, it's the skill itself. Trading in the foreign exchange market, bro. Use this skill, the skill that we've been talking about to do it. We're gonna talk about the pros, we'll talk about the cons. All right, you should already know this if you've been tapping in, but if I just gotta continue to say it, so let's do it. All right, so the pros to trade in the foreign exchange market, and actually let's go back if you don't really know why this can help grow the forex market. If you're trading, excuse me, if you're forex trading, and this right here can be a very lucrative skill. I had somebody tell me that this wasn't a lucrative skill. That's because they wasn't their mind wasn't open enough to sit down to retain the skill so they could become lucrative to them. But this is a very lucrative skill. But it's not for the faint-hearted. I promise you. It requires discipline, strategy, and a strong understanding of the market. So for short-term growth, you're looking for that. Forex can work, but only if you're willing to learn and manage the risk for a short term. If you got it, just look for short term things. It can work for you. Personally, they a lot of people don't think you can be on exchange trader. If you want to be professional, then you got to do this in the long term. But you're just looking to get some short term gains on the investment, boom, you can do this short term as long as you're willing to learn and manage your own risk. Okay, and let's talk about the pros and cons that goes along with trading in the foreign exchange market. The first pros you got is high potential returns. A rapid price movements can yield profits in short periods. So as you can see, we can get in the market for a short period of time, 1 or 2 days, and get it back out. Or you can get into the market for an hour to 4 hours and get the money back out. Okay, so that's one way. The liquidity for forex markets operates 24/5. So within a immense trading volume, you can literally utilize this 24/5. Okay, not really 24/7 because the market is not open on the weekend, but you can utilize this, all right, in the foreign exchange market. Now you can tap into other markets like indices and cryptos, and those are different, all right. You can trade those at those specific times, but we will talk about that at a later time. Specifically for Forex markets operates at 24/5. All right, and the last pro is diversification. It allows you to hedge against the domestic currency and trade with proper risk management, right? So that's a good thing. So let's talk about some cons going into it. So the cons of trading the foreign exchange market, as we know, is high risk. The market volatility can lead to a significant loss. So if you don't know what you're doing and you're risking all your mama's money, your sister, your brother, and their daycare money, don't do it. The complexity of it is also a con because it requires the technical knowledge, market analysis, and the constant monitoring. So you got to deal with a lot of physical, mental, and well-being wealth. Okay, so your spiritual has to be intact. Your physical being has to be intact, and your mental has to be intact. That whole triangle has to be one accord. Okay, and that leads into the last con that it can have on you, the emotional stress. As high leverage can amplify both gain and losses. So you could be stressed out learning this skill, but if that's only because you're not truly here to learn. If you come for the long term and you're truly here to learn, make sure you tap in with me. We can go into it. All right, hit that email below. Or you could go and find a mentor that can actually sit down and cater to you, right? Or just go through someone's course and learn the skill, but it's up to you. So, what's a smarter and a stable way that you can do these alternatives? Well, a smarter and stable alternative for people who just can't deal with that uncertainty. All right, just can't learn the skill. Well, you can invest into mutual funds or ETFs. This helps diversify the global assets without direct risk of foreign exchange trading. And you can do robo advisories. And this is something I don't recommend, but I'm going to tell you because this is something I see others do. Okay. So automatically manage diversified portfolios based on your goals and risk tolerance. So it can help you get an eye for it, you know what I'm saying? But me personally, I think learning the skills is the best way to get an eye for all this. If you ask, I'm biased, but I'm telling you, it's legit because you want to know where your money's been invested. All right. So let's talk about the last and third way you can invest your money along with this skill, okay? Because you know the skill is involved. Um, the third way you can do is to diversify your investments. You want to look into index funds, ETFs, or stocks, even cryptos. All right, these could give you a long-term growth while spreading out your risk instead of putting your eggs all in one basket. So you can literally dive in and learn more about the market. Like I just told you, it's not just about forex, but you can learn about stocks, cryptos, and DCs, which are in futures, and all this good stuff. Okay, all right. So what are some cons? Uh, some pros and cons of this that we can look into. Okay. Well, the pros and cons of these diversified investments is the long-term growth for the pros. Historically high returns, especially in the index funds. In the index funds, okay? Passive income, you can help with this. It helps the dividends from stocks and ETFs can supplement the income. And inflation hedge, it can outperform inflation over time. So while everybody's going through the up and downs of the pandemic and inflation and price and all that, you won't even feel it because you're in tune with yourself with the market. Okay. So let's go along with some cons as we continue to wrap this up. Um, some cons that you can run into is market volatility. The values fluctuate. The values can fluctuate dramatically in the short term, and the risk of loss. All right, everything you can do, learning this skill or anything in the foreign exchange market, financial market, you can lose. All right, so you gotta keep that in mind. No matter what financial market you in, cryptos, it doesn't matter. You have to be able to take the willingness of you can risk the loss. Okay, so that's the only thing that it is. All right, nothing is guaranteed. All right, nothing is guaranteed. The risk of the loss is not guaranteed. The your poor performance or your bad timing can um really tank your capital. So because none of this is guaranteed, and your time commitment is also could be a con, right? It requires research and resilience, not resilience, but it requires research and reliance on a trusted advisor. So you want someone that's been into the skill, that knows exactly what they're talking about, has been in it, that's giving good, valuable information, that's actually giving you the meat and potatoes with the gravy and all of that, right? What is some smarter or more stable alternative that you could do if you are not able to sustain these risks to the losses, or you're not willing to go through that? Um, well, a smarter way or a smarter alternative that you can do is dividend um, autocrats. And you can go into that country, so it's actually pronounced as aristocrats. So dividend aristocrats. These are stocks within a history of stable and increasing dividends. I don't technically do this, so I had to like read up on it a little bit more, but you can invest into that. As I get more into the investments and stuff, I'm looking to learn more about it. But another way you can put it into more of a smarter and a stable alternative, other than ETFs or index funds, is what you call it for real estate. I want to give you the right acronym. I don't know why it just slipped my mind, but it's called a REIT. Yes, it's called a REITs, a REITs, all right, real estate investment trust. This provides exposure to real estate without directly owning property. So I bet you guys didn't know that either, right? You can really invest into real estate investments, all right, without being onto the property or investing into property, period. All right, so some other ways, smarter and safer ways and more stable ways you can make your money work. If you don't like those, you can look into retirement accounts such as a 401k, RA. You can also look at treasury bonds and I bonds. You can like I said, into real estate itself, um, along with the um, real estate investment trust. You also could go into peer-to-peer lending, which is platforms like Lending Club, which offer stable returns for moderate risk. And last but not least, you can build a side business. All right, use excess cash to generate additional streams of income. So these to me are the best approach. Depends on your goals, your timeline, and the risk tolerance that you have. All right. For most, balancing safer options with higher growth investment provides the stability to meet your financial milestone. So please do not do something that you think that I will be happy or proud of. Do something that you're happy and you're proud of, because if these don't meet your financial milestones, you're going to tank. Okay. And as you diving into Forex, learning more about Forex, and then as you get tapped into the world of the financial markets, and you're just learning three other ways that you can invest your money, such as use savings accounts, high yield savings account, 401ks. You can doing it to treasury bonds, certificates, um, foreign exchange, ETF, stocks, index. You learning all this stuff and still trying to be a person while life be life. And at some point in time, you're going to say, Forex is stupid. And I agree. I totally agree. So I'll see you next time here. Forex is stupid, man. Yeah, you gotta get it. Reality 5,000.